Let's take a look at a different kind of chart that has the 9-month relative performance, but also the performance from the last sentiment low. So we get the short-term performance and the leadership around that, and we also get the longer-term performance. So here it is. This is the Canadian Materials ETF. And the top chart here is the running 12-month performance compared to the two main indexes. The red line is the Standard & Poor's 500 index, and the green is the CSE. So what this is the difference in performance between the Canadian Materials ETF and these two indexes. So what we see back here, for example, is in mid-January, the Canadian Materials ETF had underperformed the US market by 40%. So, and for the Canadian market by about 10%. So it was doing much worse than the Canadian and US stock markets. Now, this chart below is different. The one above is a running 9-month performance, but this one down below here is actual price changes of these three things. And we measure from the last sentiment low, or the last stock market bottom. And the last stock market bottom in the Canadian market was January 20th, right in here. That's when everything made a correction low, and it had been going down for about a year. So from that point onward, this chart below will tell us how each of these things are doing. The Canadian Materials ETF, which is in black, the US market in red, and the Canadian market in green. And we rebase this to so that we start out on even footing on a percentage basis. So going forward from January 20th, starting at 0, we have what happened here was that the Materials ETF went up very much faster than the Canadian and US stock market. It was a real leader. Now, materials is gold mining, metals mining, chemicals, etc. So, and as you know, gold has been an incredible big winner, and so are the mining. Now, interestingly enough, the leadership here started exactly at January 20th. But if you look up here at January 20th, we didn't get an outright buy signal for that ETF until sort of early April. So it wasn't until here that the performance measure, the materials versus these two markets, finally, on a 9-month basis, materials were outperforming. But if you were looking earlier and saw this new leadership, you might have been in that much earlier. So this is how a chart looks at the bottom, where something is starting to outperform the market from the last stock market low. Let's take a look at the opposite. Let's take a look at a situation where something that was a leader is now starting to underperform. So here we have the US ETF, which has the leisure and entertainment stocks. Yeah, we're talking Disneyland, that kind of thing. Netflix, movie theaters, Hollywood, filmmaking, etc., etc. So here, from the last sentiment low, when the sentiment low in the US market was on February 11th, that's where things bottomed. And from that point onward, we see the leisure and entertainment ETF has been underperforming quite considerably both the US and the Canadian stock market. Whereas before here, we had a situation where on a rolling 9-month basis, this ETF was doing better than the US and for sure by a long shot, the Canadian stock market. But we see here from February 11th, there's a change in leadership, and this group, for whatever reason, and you could look into the reasons why, there might be something new happening to this industry that makes you want to get out of it even before it goes below the sell line, if there's some fundamental reason why it's doing poorly. So this type of chart gives you both things. You have the long-term running 12-month performance compared to the market up here, and down below you have the short-term performance measured from the last stock market low point as to whether this group is leading or lagging the market. And if that's a change, you can look into why it's changing, why the leadership is changing, and make an investment decision accordingly. That's it. Thank you very much.